Google daily chart. Blue line is a simple day moving average. Being asked for tomorrow, how do we trade the 605 call? And why would that 605 call pricing $1.40 by $1.70? That's below the market. There's a 260 really by 290 also. The thing about it is Google is sitting on the 10-day simple moving average. Now, if Google was to go below this 10-day moving average on a percent level, then the high frequency electronic selling would hit it and the stops would be taken out here at the base of the 603 level. Right down in here, 603.87. This is what it looks like on a daily chart. So, when would the majority of a sell down happen in a name to the 20-day moving average? That's at 597 or so. And when you break the daily lower consolidation, that's going to be right here where we got that bounce to that high. However, we're at that 10-day simple moving average. And another call contract that we're going to be looking at is a Google $600 call, and why we have a high alert on the $600 call. We'll show you why. It's a weekly trade, and the $600 call, you can see, was up here right around, let's just call it $19.70 is a high. And it's a weekly. It expires Friday, and tomorrow's Thursday. But look at the low of where that call was today. So take a look at some of the price brackets of how that $600 call within the weekly expiration cycle had great gains, but look what happened to them today. Now, having said that, I'm going to pull that $600 call. Here is the ones that I've been given bids on for tomorrow right here. Okay, but listen, if they break support levels, these call contracts right here come down to great entries. Yes, it closes at 607.94. Yes, if you break through the 10-day moving average and that last low of 605 and some change, you're going to come on down here to that 20-day moving average, which is going to have major support on a daily level. So that's the high alert, so that you could see the shorter 5-day trend. 1, 2, 3, 4, 5 days. You can see the top of the resistance on a daily level here. That will be the setup. Now, back to this one. I'm going to give a bid. Now, if they break that down, these calls I'm going to price on tomorrow morning's buy and sell action based on what? How the market. If the market is gapping up, well, then that's going to lead to a lower price entry. I mean, if the market is gapping down, well, what is that going to lead to? So if the market's gapping down, these go up and these lose value and the puts go up. So on the put side, right over here, that 615 put, that was up $3.28 today, hit a high of 920, and they took all the premium from the high today of 17 down to 850. So if we break support level, these calls tomorrow could come right in line there between 640 and 670 bid. There's a great bid if we break that daily 10-day simple moving average right here. It's in the video. It's the blue line. We could get down into, between now and Friday, we could get down as low as $3.60. If we break these consolidation levels and sell down here below the 600 level, they're going to take all the premium out of the $600 call, and they will too the 605. That means that the 615 put would go way up in value right here. That's right. And that's a 224, 615 put. So if Google was to fall through its support levels, then these would go racing in price, going way up, and you'd have a great value. On the other hand, if we hold the key support level, we can always move in at the current price level because, once again, as an MMT and a market maker, we didn't buy them at 17 and ride them down to 850 or owned them at 1560. No, we did not. The truth of the matter is that depending on what Google does tomorrow, our entry is going to be wholesale in either direction no matter what. That's exactly right, no matter how you look at it. So this is how to buy $600 calls based on support, based on the 10-day simple moving average being violated, having the plan, if it has a sell-through, where these lower prices on the $600 call are going to go to. And another thing I'm going to tell you, we're not going to rule out buying the $5.95 call. If we could hook this for about $9.50, they were $22 on the high. The call side got taken to the woodshed. The close previous day was $19.50. Last print there was $12.72, marked down $6.78. Now, having said that, these are what we call, and the market would have to have higher volatility, but these don't go lower in value unless Google breaks its support levels. And Google would have to sell below the 10-day moving average down to the 20-day moving average, and that's your Thursday, Friday options expiration plan on Google. Both looking at the 615 put. Let us not forget here where my pointer is on 224 expiration. Friday, a 610 put. They gave them $1.50 premium, but I can tell you what, if you break through here and sell below there to come to test the 20-day moving average between Thursday and Friday, that's tomorrow and Friday, and you break support, that's what's going to happen. The 610 put would make a major play. So, high alert on Google 595 calls, high alert for the $600 call below the market, and not to mention the current price from $11.30 down to $5 today on the 605. So they lost $6.30 in premium to that low. Trade management. Options expiration. 610 put, 615 put. High alert for MMTs right now with the 10-day simple moving average in play on Google. Get ready, get your trading boots on,